Do you have yesterday's high and low marked on your charts right now? Chances are you don't. Well, let me tell you, those previous day levels are absolutely crucial to be paying attention to. One of the most important factors that influence price action is the previous day high and low. These two levels serve as crucial reference points, providing valuable insights into the current market sentiment. Whenever I look at the price action, one of the first things I do is plot the highs and lows of the previous day. I use this indicator. Time and time again, I'll see the price testing that resistance from the last session before getting rejected, or finding support right at the lows and bouncing. Add them to your charts and just see for yourself how often the market respects them. These levels will give you an edge in spotting reversals and momentum shifts. And in combination with the VWAP, the high and low prices from the day before will offer amazing low-risk, high-reward trade points neglected by so many traders. So why are the previous day high and low so important? Well, there are several reasons. First, they represent market memory. These levels represent the maximum and minimum prices reached by the market in the previous trading session. This information captures the collective sentiment of traders on that particular day, providing great insights into the market current direction. These levels are also liquidity magnets. They often attract a high volume of buying or selling orders as traders anticipate price movements around these key points. This increased liquidity can amplify price movements, creating both opportunities and risks for traders. Previous day high and low can also act as psychological barriers for traders, influencing their decision-making. Many traders may be hesitant to enter trades outside or inside these levels, adding to the potential for significant price movements. So each trading day leaves its mark through the highs and lows it hits, and other traders watch these levels closely as potential battle zones. Whether the price was unable to break through resistance or found support before falling further. The memory of a day's action sticks around in traders' minds, even after the markets close. And that's why these levels carry meaning based on the previous activity. You know that at that point, buyers showed up to stop a drop, and sellers overwhelmed the rally attempts around this area. You need to have these levels on your charts and be ready to take action if price revisits that area again. One of the coolest things about using those previous day levels is how versatile they are. It doesn't matter if the market is trending up, down, or sideways. Those highs and lows from the session before are always providing clues. In an uptrend, it's amazing how often that yesterday's low becomes a rock-solid foundation. Price bounces right back up from it quite often. Of course, you'll often see some liquidity runs below this level. Don't ever expect these levels to be respected right to the pip. On the contrary, expect liquidity hunts above or below these levels. Same thing on the flip side. When we are trending down, the previous high tends to act like a magnet, pulling price back down after any bounce. But it's not just trends. Maybe my favorite is watching the magic in ranging markets. You'll see price bouncing between those two levels like clockwork, testing the high as resistance before falling back to find support at the low. No matter what kind of action the market is serving up, those past closing levels make for reliable areas to find structure. Scouting for breakouts gets a whole lot easier when you know the zones the market will likely run into support or resistance. But maybe even better, you can find reliable reversal plays even when things are moving sideways. The key is stacking the odds in your favor as much as possible. For me, that means looking for confluences on my charts. If I see price reacting to a day low and bounces from a monthly VWAP line, Now we're talking high probability. That monthly volume weighted average price does a great job showing us those dynamic support and resistance areas, and it's always shifting based on how price has traded recently. So keeping tabs on how the market interacts with those VWAP bands is a great way to spot reversals in the making. From studying the market over so many years, I've noticed some repeatable things about how price interacts with the VWAP bands. In more rangy conditions, when there's no obvious trend pushing up or down, I've seen time and time again how reliable it is for price to bounce between that upper and lower band like a pinball, just pinging off support at the lower line before stopping against resistance at the upper bands. That middle main VWAP line acts as a real magnet, whether pulling price back up or guiding it down again. And it also works like a charm in trends. You'll often spot price sliding along, respecting the middle VWAP. Combining the previous day levels with the VWAP, here's how theory plays out in real price action. The way I see it, when those areas overlap, that's your high probability trade area right there. Think about it. If price is bouncing around the day's low and is finding support at the VWAP band, you've got yourself a perfect confluence zone to be snapping up some trades. Great odds the move will reverse in your favor. Same goes for resistance. When the market tests the yesterday's high, but then stalls right at the VWAP line, textbook shorting opportunity. So always be scouting your charts for where those levels coincide. You can see this market was in a bit of an uptrend based on those higher highs and higher lows, but also clearly trading sideways between these established zones. So when price comes down and tests right at the previous day low and bounces off the lower VWAP band, to me that's a strong buy. We got two major support levels, stacking the odds in your favor. And there's more. We had this zone that had previously been acting as resistance and now turning into support. Three major forces stacking up under the market. It doesn't get much better than that. The entry is near that confluence area and the protective stop right below it to mitigate against any potential whipsaws. Here's a short setup. First aspect is we're in a clear sideways trading zone with no momentum. Then we've marked our key resistance area between the previous high and the upper VWAP band. Perfect area to short as soon as we got that touch of the confluence. This is an aggressive entry. As soon as price reaches the zone, you enter a sell trade. But for those that are more conservative, you wait for some sort of confirmation. So waiting for a red candle bearish rejection is equally valid. I'm looking at a stock that has been trading sideways for the past days, bouncing between the high and the low from the previous day. Yesterday, it tested the low several times, but bounced each time. This tells me that that level is providing support. Today, I see the price dipping again and getting close to the previous day low, but this time, it's also lining up right at the lower VWAP band. I know from past performance that this stock likes to find support at the low. Adding in the fact it's now reaching both the low and converging on the lower VWAP, it sets up a lower risk entry point. If I enter long, as it's testing this confluence zone, I can set my stop loss just below the VWAP area. This gives the trade room to bounce without the risk of triggering the stop on small volatility. This market had been trending lower over the past week, with each successive day's low providing a lower low in the downtrend. And here we saw price drop, which closed near the low of its range. This established a strong support point. The next day, price spiked up, but then rolled over at the resistance level from the prior day's high. It began descending back down from the upper VWAP band, showing sellers were active on those rally attempts. So when it reached the confluence point of the previous day high, along with the upper VWAP band, that was the moment to initiate the short trade. Knowing we are still in a firm downtrend, this setup gave a low-risk entry with a protective stop placed above both the resistance levels. I am looking at Tesla. The stock has been trending down for the past week, with lower highs and lower lows. On the previous day, there's a clear resistance formed right here, with price testing it twice, but rejecting both times. Today, I noticed the price is rallying in the morning and approaching once again this resistance level from the prior day, as well as the upper VWAP band. This confluence of resistance signals to me that there is a high probability of a reversal lower if it reaches this zone. So the play here is a short position with a stop loss placed above the upper VWAP band. In this example, I see the market has bounced between the previous high and low, forming a sideways range. Then price pushes up to retest the high, but stalls directly at the upper VWAP band. This confluence of resistance made for a great short, since both levels were likely to cause a reversal. And here we have an uptrend, and I noticed price is hugging the middle VWAP line nicely. Then it dips to retest the previous low and bounces perfectly off the lower VWAP band. This signal at those stacked supports provided another low-risk long entry. Now we have downtrending conditions, as price was respecting the VWAP very well. So when it bumped up to tag yesterday's high, but rolled over at the upper VWAP band, it was an ideal short setup with converging resistance. Again, the market started to range between the high and the low, so I watched for opportunities when it hit those levels in conjunction with the VWAP. A retest of the low coinciding with this VWAP band gave a low-risk entry for the next bounce. As the trend resumed down, I see another great short after price failed at the high and turned right at the upper VWAP band. Seeing it reverse at that confluence resistance area led to another price fade. I hope you see the potential of this trading strategy. It's not a perfect system by any means. Of course, you can refine your entries even more using volume or even some smart money concepts. So drop a like if you want a follow-up video, and in the meantime, you can watch these videos.